We're talking to Sula Vineyards on their numbers in Q4. A bit of a muted growth on revenue and EBITDA, but in line with expectations. Slowdown in urban consumption has been responsible for the decline in revenue as well. We're joined by Rajeev Samant, CEO of Sula Vineyards. Rajeev, very good morning. Thank you for speaking with us here at NDTV Profit. How do you recap Q4?
So Q4 has continued to see some the urban slowdown, as you mentioned. We are, though, however, seeing some green shoots. We had always guided that Q1 would look better because last year Q1, if you remember, there were elections. So we had national elections and we had state elections in Maharashtra. So, fingers crossed, cautiously optimistic that Q1 should be a better show. And we do believe that the worst is behind us.
Tell us what the overall demand is looking like, because urban demand that you're saying is slowing down. Are the fundamental factors pushing behind that really changing? One would argue not really, Rajeev. So when you're saying the worst is behind us, I'm just trying to understand why.
Sure, you're right. So, a couple things to remember here. You have the sort of the bigger factors playing out. And yes, there's still that slowdown. We still see that. And now, of course, we have some amount of heightened uncertainty given the situation. However, having said that, we did have specific factors that impacted us. So you always have wider macro factors and then you have micro factors. So yes, in the case of the macro, we are still not out of the woods yet. We do hope that, the tax cut, interest rate reductions are going to come into play pretty soon. However, at the micro level, things like the elections, then we had the Pune shutdown, etc., which really impacted us in FY25, and those are firmly behind us in FY26.
Rajeev, sorry, just one question on your margins. The slide that we've seen from 24 to 22.6%, this was because of these shutdowns you've mentioned. It's because of volumes coming down, or has there been pressure elsewhere?
Well, when you don't have a significant sales growth, it does impact on margins. Our business is pretty sticky. Grapes, you got to sign long-term contracts, and if sales slow down, you already have the grapes that you're looking for. Some of those grapes are more expensive grapes. They end up going maybe into cheaper wine when you don't sell as much of the wine as you expected. So you do have sticky costs. However, looking ahead, we've really taken a hard look at our cost structure. And we are very confident that we're going to have a good bounce back in terms of profits and a good reduction of costs vis-a-vis the top line in FY26. So we are adjusting to the new reality, and we're confident about it.
Good morning, Hiral on this side as well. So clearly, the concentration now for you is going to be your premium segment, which is almost 77% of your total revenues. Taking that into consideration and the efforts that you're making on the cost side, how are you expecting FY26-27 to then pan out, not only from a margin perspective, but also from a top line perspective? What will be that growth range that you should look at? Because 25, yes, it has been slow with a 2% growth. Let's be honest, it's been a slightly tough year.
Good morning to you, Hiral. Yes, FY25 has been what I would call a reset year. So after 3 excellent years, yes, we have had a slower year. 2% was not what we were hoping for at the beginning of the year. We were hoping to do much better than that. But looking ahead to FY26, we do feel that the worst is behind us, and we should see a much better sales growth. And definitely, what we are looking for is we would be disappointed if we did not deliver double-digit earnings growth.
Okay, so double-digit earning growth is what could be on the cards from here on. Apart from that, if you have to look at the demand in terms of wine, how are you seeing that pan out? Because recently, in terms, if you have to look at IMFL versus beer, that's where the juices, where people are talking about how the shift has happened between these two. Now, if you have to look at wine as the third component, how are you looking at the demand picture?
So we're looking at a stronger demand picture for our more expensive wines. So, we broadly categorize into four: popular, economy, um, premium, and elite. And our elite wines have shown the strongest performance this year, which is really good news for us, because these are wines typically between 1,000 and 2,000 rupees. There we've seen double-digit growth. All the other categories, unfortunately, have been impacted by the urban slowdown. And also, there has been some unsustainable discounting in these segments that we can see it sort of drawing to a close or definitely reducing. We ourselves have cut our sales and distribution expenses in Q4 and again in Q1. And so, we are confident that things are getting better on the discounting front, which should benefit us. But our elite wines, that's been a big success story, especially our source range. That's been our standout. So we see good times ahead for that.
Okay, so good times ahead with regards to where overall demand goes. Any new launches planned, Rajeev, in terms of FY26? And if so, in which segments would they be?
So very interestingly, for around 5 years, we did not have a new launch in our premium segment, the classic Sula series, the really well-known Sula Sun. And we heard our clients, we heard our sales force. And so in FY25, we launched our first Merlot as a Sula Merlot, the classic, not in the sauce and rasa range. And I'm happy to say that you can expect within this quarter itself, hopefully, one more launch within our Sula Classic range. That's all that I would like to say for right now. There's more ahead. But again, we are strengthening this time our sub 1,000 rupee portfolio, because, the bulk of our consumers, of our clients, are ultimately in sub 1,000 rupees. Maybe we've neglected that segment for new launches a little bit over the last 5 years. So we're going to make up for that.
Right. So I think that's what I think consumers will be watching out for as well. But thank you, Rajeev, so much for joining us on the show at NDTV Profit. Always a pleasure to speak to you.